Hello students, welcome to all of you Shiksha 360 CAT classes. Today basically we will discuss the last part as some students have doubt in the previous session in the ABFM, that is regarding the debentures. As some students have doubt in the previous session, so I will explain the concepts with some other examples clear in detail. So before moving towards that, the last topic, so can anyone tell basically what is the difference between the venture capital and the private equity? Because in this topic we have to discuss also regarding the private equity. So anyone has any understanding regarding that? Clear? So venture capital, basically these are those investors that or who are investing in the newly established companies. Clear? Established companies. Clear? Venture capital investors are the risk takers. Clear? They are the risk takers. Clear? Because the companies are newly established. Clear? So they are taking the risk. Clear? So it depends whether they will earn or not. Clear? Earn the profit or not. Clear? Or their money will lose. Clear? But they will come under a venture capital investor, basically who are investing in the newly established company. That's why they are also known to be as the risk takers. On the other side, private equity. Private equity, basically these are those investors who are directly do the investment in the private companies. Clear? Basically who are do directly investment in the private companies. Clear? That is to be known as the private equity. Clear? They are those types of investors which are established in the, they are those types of investors basically which are invested in the well-established companies. Clear? They are invested in the well-established companies. Clear? So this is the main difference between among that. Clear? This is one of the question asked in the previous session by one of the student. Okay. So this is the main difference among that. Now move to the session. So first of all, here we have to discuss regarding the debentures. Clear? First of all, here we have to discuss regarding the debentures. So what is the debenture? As from the name, it suggests that debenture basically it is a debt instrument. Clear? Debenture basically it is a debt instrument. First thing in the examination, basically sometimes they will ask in the examination, what is a debenture? Clear? What is a debenture? Basically, debenture it is what that basically debenture it is a debt instrument. Clear? So section 2 subsection 30 of the Companies Act 2013 defines debenture basically which includes debenture stock. Clear? Which includes debenture stock. Clear? What is the meaning of the stock here? There is one word that is debenture stock. Clear? Like this one, this one. These are the different shares. So group of all becomes a stock. Clear? Group of all becomes a stock here. Clear? So which includes the debenture stock, bonds, or any other instrument of a company evidencing a debt. Clear? Debenture basically it is a debt, that is company is taking the money. Debenture, that is debenture. Basically company will issue a debenture and they will take the investment from the public. Further, that debenture basically it is to be secured or unsecured. That debenture it is to be secured or unsecured depend upon the case. Clear? So evidencing a debt, whether constituting a charge on the asset of the company or not. Clear? That is, that debenture depends whether that debenture it is to be secured or unsecured. Clear? If that debenture basically it is secured, so they has a charge. Clear? Charge on the assets of the company. Clear? That is, that debenture has a charge on the assets of the company. On the other side, if the debenture it is to be unsecured, so they have not any charge on that. Clear? On the assets of the company. Clear? So these are also very, very important. Clear? So this definition contains a lot of points. Clear? Try to understand all these things properly. Clear? This subject is not typical. The main reason that you are trying to, if you are trying to learning or cramming these things, then it will be difficult. Clear? Try to understand these things. In other words, basically it is a written instrument acknowledging the debt. Clear? That is, we are taking money from you and we have to pay you the money after a certain period of time. Clear? So in a return, in other words, basically it is a written instrument acknowledging debt by the company, promising repayment at a certain future date. That is, we have to repay you basically after a certain future date. Clear? On a certain future date. This is another form of long-term borrowings. Clear? This is another form of long-term borrowings targeted at various individuals or institutions that subscribe to the issue and pay to the company. Clear? So this is another form of long-term borrowings targeted at the various individuals or institutions that subscribe to the issue and pay to the company. Clear? That subscribe to the issue, that they are subscribing these debentures and paying to the company. Clear? Like just like that, shares. So the terms of issue like tenure, rate of interest, denomination, minimum subscription, total issue size, etc., all form the part of the issue document. Clear? All are part of the issue document. Clear? Like what is the tenure of that instrument? What is the rate of interest? What is the denomination? What is the minimum subscription? What is the total size, etc.? All form part of the issue document. Clear? So now let's discuss what are the following are the main features of the debentures. Clear? Now we have to discuss following are the main features of the debenture. So please tell fast now. This line, it is clear to all of you, basically whether constituting a charge on the assets of the company or not. Clear? If they will constitute a charge on the assets of the company, then it is to be secured debenture. This is the type of the debenture. Clear? Then it is to be the secured debenture. If there is no charge, then it is to be the unsecured debenture. Clear? Then it is to be the unsecured debenture. Now we have to discuss the main features of the debentures one by one. Clear? So let's start. First of all, an instrument. Clear? So debenture, basically it is a debt instrument. Kindly remember that. Debenture, basically it is a debt instrument issued by the borrower company. Clear? That the company who is taking the money. Clear? Debenture, basically it is an instrument issued by the borrower company who is taking the money, promising to pay. Clear? They are in the debt, they have mentioned that is promising to pay at fixed future date a certain amount to the holder. Clear? So debenture, basically it is an instrument issued by the borrower company, promising to pay at a fixed future date. Clear? Promising to pay basically at a fixed future date a certain amount to the holder. Clear? A certain amount to the holder. Next point here, that is agreement of deed. Clear? This is another case under that. That is after a specific limit. Clear? After a specific limit, basically this point comes into role. Clear? This point comes into role. Otherwise, generally it will not comes into role here. That is what they are saying, that if the debentures are issued to more than 500 persons. Clear? That is, if the debentures are issued to more than 500 persons, so trustees are required to be appointed to look after the interest of the debenture holders. Clear? That is, if the debentures are issued to more than 500 persons. Clear? Debentures are issued basically to more than 500 persons. So in that case, basically trustees are required to be appointed to look after the interest of the debenture holders. Clear? So trustees are required basically to be appointed to look after the interest of the debenture holders. Clear? To look after the interest of the debenture holders. Third one, regarding the regulations. Clear? Regarding the regulation, first of all, we have already understand that it is mentioned under the section 2 subsection 30. Clear? Subsection 30 of which act? Of the Companies Act 2013. Now move to the next one, that is regulations. Sorry. So section 71 of the Companies Act 2013 contains provisions relating to the issue of debenture. Under what it mentioned, that is covering the points such as the manner, procedure, convertibility. Clear? This is also one of the feature. Clear? Voting rights. Clear? Basically, when the person basically holding the debenture basically will get the voting right. Redemption procedure, creating reserves, prospectus or invitation, trust, etc. Clear? All these things are to be mentioned under the regulations. Clear? So one question from my side to all of you, please answer. Whether the debenture holders having the voting rights or not, clear? Whether the debenture holders have voting rights or not. No. Yes, you are right. Basically, debenture holders have no voting rights. As such, no company basically will issue the debentures having voting rights. Okay. So later on, if they will provide any convertibility, then it's a different thing. Generally, basically, debenture holders are not the owners of the company. Clear? Are not the owners of the company. They are just like the creditors to the company. Okay, so they are just the creditors to the company. Now move to the next one. Fixed tenure, clear? That is the fixed tenure. So loans are repaid, clear? Loans are to be repaid in the installments over a period of time. Like if we are taking a loan from the bank, so we have to pay in the form of the installments. On the other hand, debentures are repaid on a fixed date on the expiry of the term, clear? On the expiry of the term. So repayment on maturity, it is called as a redemption, clear? That is repayment on the maturity. It is technically in this language, it is to be known as the redemption. Perpetual bonds are also permitted to be issued. Clear? Perpetual bonds are also permitted to be issued. What are perpetual bonds? We will cover in the later session. Clear? Not presently here. Clear? Perpetual bonds are also permitted to be issued. Next one, that is the fixed rate of interest on the debentures. That this much amount you will get here. So the rate of interest, it is also prefixed. Clear? The rate of interest here, it is also prefixed. In case of so-called zero coupon bonds also, clear? What are the zero coupon bonds? That is, they are issued at the, we can say that at the less value, and on the maturity, you will get the full value. Clear? That is, we can say that issued at the discount in technical language. Clear? So in case of so-called zero coupon bonds also, a fixed rate of interest payable at the time of redemption is involved, as these are issued at a discount to their redemption value. Clear? Like if the bond, it is of rupees 100, so they are issued like 94, 95, and on the maturity you will get rupees 100. Clear? You will get rupees 100. So these are issued at a discount here. Clear? So these are issued at a discount here. Clear? So this is the meaning of that. That is zero coupon bond. Clear? That is, they are issued at discount. Next one, that is options with the issuer. Clear? Options with the issuer. So the company issuing the debentures can incorporate an option like call option. Clear? So call, what is the meaning of that? Call basically means buy. Put basically means sell. We will discuss in detail regarding that in the BFM. Okay, so here just for understanding purpose, so the company issuing the debentures can incorporate an option like call option, where it can repay the principal before due date at a fixed price. Clear? Where it can repay the principal before due date at a fixed price. Clear? Before due date at a fixed price. This is called as the call option. Clear? That is when the company repay the principal basically before the due date. Clear? Before the due date, or they can take back their debenture. That is the call option. Clear? That is buyback. That is just for understanding purpose, not related to any technical thing here. Buyback. Clear? Buyback. That is the call option here. Clear? They will implement the call option to be here. Now move to the next one. That is the options with the investor. Clear? Here option with the issuer Next one, that is option with the investor here. Clear? Option with the investor here. That is the company issuing the debentures can incorporate an option like the put option, where the investor, that is who is investing in the company, has the option to demand the redemption before due date at a fixed price. Clear? That is before due date. That is if they are demanding their money back. Clear? Demanding their money back. That is to be known as the put option here. Clear? That is has the option to demand a reduction basically before the due date at a fixed price. Clear? Before the due date at a fixed price, that it is called as the put option. Clear? That basically it is to be called as the put option here. Okay. So option, that is basically it is in the hands of the investor, and earlier one that is basically with the issuer. Clear? Earlier one basically with the issuer, and this is basically with the investor here. Clear? This is basically with the investor here. Clear? Next one, that is the no voting rights. Clear? So next one basically that is the no voting rights here. So section 71 subsection 2 of the Companies Act 2013 basically prohibits giving any voting rights to a debenture holder. Clear? As per section 71 subsection 2 of the Companies Act 2013, basically it prohibits any company to giving any voting rights basically to the debenture holders. Clear? To giving any voting rights basically to the debenture holder. Next one, stake in the company. Clear? So next point which we have to discuss, that is regarding the stake in the company. So in the case of the convertible debentures, clear? In the case of the convertible debentures, wholly or partially, which are permitted to be issued, the debenture holder gets an equity stake in the company after conversion in the equity, followed by the voting rights. Clear? So if there will be converted, then it will get the voting rights. Clear? So in case of convertible debenture, clear? Either that debenture it has to be wholly convertible or the partially convertible. So which are permitted to be issued, the debenture holder gets an equity stake in the company after conversion in the equity. Clear? Gets an equity stake in the company after conversion in the equity, followed by the voting rights. Clear? Followed by the voting rights. So the ratio of conversion as well as the price. Clear? The ratio of conversion as well as the price at which the shares will be valued is indicated in the offer document. Clear? That is going to be indicated basically in the offer document. Clear? So the ratio of conversion as well as the price at which the shares will be valued is indicated in the offer document. Clear? So all these things basically will be indicated in the offer document. Now move to the next one. Types of the debentures. So please tell fast now. All of you are able to understand regarding all the features of the debentures. Very, very important and easy thing. Clear? Just you have to understand this thing. Definitely you are able to answer the question in the examination if you are able to understand all these things. Clear? Very easy things, just you have to understand. Now move next one, that is what are the types of the debentures. Clear? Next one which we have to discuss, that is what are the types of the debenture, that is on the base of the tenure. So there are debentures specifying redemption with the call option, put option, or with the fixed tenure under this kind. Clear? Under this kind. Further, that is perpetual bonds with the call option are also permitted to be issued. Clear? Perpetual bond basically with the call option are also permitted to be issued. Clear? So one question I will give you more here, that is what are the perpetual bonds? Kindly comment in the comment section. Okay. So based on the tenure, that is basically redemption basically with the call option, put option, or with the fixed tenure under this kind. Clear? Or with the fixed tenure. Next one, on the basis of the security. Clear? Some debentures are to be secured, that is having the charge on the asset of the company, and some are to be unsecured. So on the basis of the security. So many a times to offer lower rate of interest and a sense of security to the investors, secured debentures are to be issued. Clear? Providing first or second charge over the fixed assets of the companies and appointing trustees if the number of holders basically exceeds 500. Clear? And appointing trustees basically if the number of holders basically exceeds 500. Clear? So when they have the facility of appointing the trustees, that is basically if they are debenture holders basically more than 500. Clear? More than 500. Clear? So debenture in simple language, hope you are able to understand, that is basically taking the loan. or take the amount not from single person, but just simple, not from single person. Clear? That is the debenture. Clear? Like from different persons. That is the debenture. Clear? That is the debenture. That is debenture. Basically, it is like a certificate. Clear? That you will get that this much amount. Basically, we will refund you after that much period. Clear? After that much period. Here. Now move to the next one. Based on the convertibility. Clear? There are also feature of the convertible of the debenture. So now let's understand regarding that. So based on the convertibility. Clear? So to provide additional incentive. Clear? To provide additional incentive to the investors, the companies issue partially or fully convertible debentures, so that at a future date, upon conversion, the debenture holders can be the growth participants and can also have the voting rights. Clear? And can also have the voting rights. Clear? So this one, it is one of the feature of the debentures. Next one, that is the based on the negotiability. Clear? Next one, that is based on the negotiability. So what is the meaning of that? So the debenture, basically what is that? Basically it is a debt instrument and mostly transferable by the way of a registered transfer form. It is not like that. Your friend has debenture holder, clear, of a company, and you will take their certificate. So it, like you can see that basically, like you can assume that you are the debenture holder. Okay. You have your name on that certificate. Clear? You have your name on that certificate. Only after that, basically, you are assuming to be a debenture holder. Clear? Otherwise, not. Okay. So the debenture, basically, it is a debt instrument and mostly transferable, basically, by way of a registered transfer form. However, in the case of the bearer debentures, like bearer check, here it is also bearer debenture. The transfer takes place by married delivery. Clear? Just by holding, you are holder of that. Clear? So, however, in the case of the bearer debentures, the transfer take place by married delivery. So such debentures are rare due to concerns such as the money laundering and benami transactions. Clear? These types of the debenture, like basically like bearer debenture, these are very rare. Clear? These are very rare due to the concerns such as the money laundering or the benami transactions. Clear? Due to the transaction like money laundering or the benami transactions. Okay, so you have to be very careful regarding that. Clear? You have to be very carefully regarding that. Okay. Now further, advantages and disadvantages. So advantages basically emanate, or we can say that we can get from the features of the debenture, such as low cost of the raising of funds, known and fixed future interest liability, known date of the redemption liability, facilitating planning of the fund management, no dilution of owners equity. Clear? Because they are not the owners. Clear? They are the creditors just only to the company. Clear? No deletion of owners equity and management powers. They have nothing, any powers. Flexibility basically to provide negotiated cost of servicing and the redemption period beforehand, some of which are not available basically in the institutional long terms, where the company does not have as such bargaining power. Clear? Hope all of you are now able to understand all these advantages. Clear? Low cost of the raising of funds, known and fixed future interest liability. Clear? This much interest we have to pay along with the principal. Known date of the redemption, because we have specified redemption dates to be here. Okay, so all these things you are What are the features? That all are the here advantages. Clear? That is no dilution of the owner's equity and management powers, flexibility to provide negotiated cost of servicing, and redemption period beforehand, some of which are not available in the institutional long investors, where the company does not have as such a bargaining power. Clear? Where the company does not have such as much bargaining power here. Okay. So now we move to the next one. What are the disadvantages here? Clear? So disadvantages, now let's understand. So disadvantages basically are that once issued, no negotiation of terms is possible. Clear? Because all the terms and possible basically discussed at the issuing of the debenture. Clear? Later on, nothing as such to be discussed here. Next one here, that is rating requirement may create some unanticipated problems. Statutory requirement of creating reserve funds and investment thereof, and finally you deal with the numerous investors as against one lender in the case of long-term loan. Clear? So here that is basically you have to deal like basically 700, 800, clear, or even more. Clear? Depends upon your requirement. You have to meet with the large number of investors. Clear? And in the case of the long-term loan, basically on the other side, basically you have to just meet one. Clear? So these are some of the disadvantages also here. Clear? So these are some of the advantages and the disadvantages of the debentures. Now, next one that which we have to discuss here, that is the private equity. Clear? Private equity. Rest whatever I have called on that you can go through easily. You are able to understand. Clear? Just understand this one. What is the meaning of the private equity? Clear? So private equity, basically I have already tell you. That is the investors directly invest in the well-established private companies. Clear? Well-established private companies. And they want that. Basically, these are the well-established companies, and their amount will continuously rise from there. Clear? They will earn more from that. Clear? On the other side, venture capital, that is, they will invest in the newly established companies. Clear? Like in the startups. We can say that here. So private equity industry has emerged as a potential source of capital. Clear? Has emerged as a potential source of capital for the corporate sector today. Lerner has broadly defined private equity organization as partnerships specializing in the venture capital, leveraged buyouts, mezzanine investments, build-ups, distressed debt, and other related investments. Clear? And other related investments. So further they will define as the European Venture Capital Association defines private equity as the provision of equity capital by financing the investors. Clear? By financial investors. Clear? As the provision of the equity capital by the financial investors over the medium or long term. Clear? By financial investors basically over the medium or long term to non-quoted companies with the high growth potential. Clear? Basically to non-quoted companies basically with the high growth potential. It is also called as the patent capital. Clear? It is also called as the patent capital, as it seeks to profit from the long-term capital gains rather than the short-term regular reimbursements. Clear? Because why they're in basically to get the long-term capital gains. Clear? To get the long-term capital gains rather than the short-term regular reimbursements. Clear? So private equities are generally less liquid than the publicly traded stocks and are thought of as of a long-term investment. Clear? So private equities basically are generally less liquid than the publicly traded stocks and are thought of a long-term investment. Clear? That is basically if they are invested for a long time, so they will get the regular income from that. Clear? For earning the profit here. Clear? They will invest. That is basically investors directly invest in the companies here. Clear? Investor directly invest. Clear? In the private companies here. So Pratt in 1981 has tried to categorize types of the private equities activities in the terms of the stages of corporate development. Where PE financing it is called for, private equity financing basically it is called for. Clear? So now these are the different stages. Just understand because in the examination they will ask these types of things. So we have to understand first one, that is the seed financing. Seed, that is at the starting, clear? Like if we are going to grow a plant, clear? So at the starting, we have to give a water, or we can say that, or nutrients, clear? All these things. So seed financing, that is providing small sums of the capital necessary to develop a business idea, clear? Providing small amounts of the capital necessary to developing a business idea, clear? Next up, that is startup financing, clear? Next point which we have to discuss, that is regarding the startup financing here. So providing capital requirement for product development and initial marketing activities, clear? So startup financing, basically what it includes, that is providing the capital required for the product development and initial marketing activities. Third one, that is first stage, financing the commercialization, clear? Like they are preparing the product on a large scale, clear? Financing the commercialization and the production of products, clear? This will be to be known as the first stage, that is financing the commercialization and the production of the products, clear? Financing the commercialization and the production of the products. Next one, what is the second stage here? That is second stage, that is providing the working capital funding, clear? Second stage, what is that? That is providing the working capital funding and required financing for the young firms during the growth period, clear? Providing the working capital funding and required financing for the young firms during the growth period, clear? During the growth. Third stage, that is financing the expansion of the growth companies, clear? Already that companies are doing well, so for more growth, clear? That is comes under the third stage, that is financing the expansion, clear? Now we have to expand more, clear? Financing the expansion of the growth companies. Last one, that is the bridge financing here, clear? Last financing round prior to an initial public offering of a company, clear? Bridge financing, very, very important. Sometimes basically they are asking basically which is the last financing round prior to an IPO, clear? Initial public offering, that is the IPO, clear? You will see that continuously IPO is to be launched in the Indian market, clear? So that is the last financing round basically prior to an initial public offering, clear? So first one, that is the seed financing. After that, startup financing, first stage, second stage, third stage, clear? Seed, start, first, second, third, last one, that is the bridge financing, clear? It is the last financing round basically prior to an initial public offering of the company, clear? Prior to the initial public offering of the company here. Okay, so hope all these points are clear to all of you. And in this session, we have to discuss up to this much point. So slides are already provided to you in the group. So kindly go through that. Within 2 to 3 days, I will provide you the schedule. That is when we will discuss MCQ in detail regarding this chapter, clear? And after that, we will start our next chapter, clear? So kindly revise this chapter. All the 6 parts uploaded in the group. This part I will share, clear, within some time, clear? So thanks to all of you for joining this session, clear? BFM sessions are continuously uploading in the group. For that, notes plus MCQs we will provide you along with some live discussions, clear? ABM I will provide you 2 to 3 topics already provided, rest we will provide in the upcoming days, clear? So thanks to all of you for joining this session, and if you have any doubt, any query, then you can ask later on also, clear?